the timing has been interesting, John, just given that this is a day or two after Xi Jinping came to Hong Kong, talking about how the city's development needs to merge with the commercial ties with the mainland as well. How significant is this news?
Well, today we're also celebrating the one-year anniversary of the Bond Connect as well, and also, of course, of the Hong Kong-China Stock Connects. But I think two things to take away from this announcement. One, China is, in terms of the economic cycle, at a very different place from much of the developed world. And so we are seeing China worrying less about inflation and more about stimulating the economy, shoring up growth. And so I saw in one of the lines come through that initially this interest rate swap connect will be primarily northbound. So northbound will open first. That'll give offshore investors some additional exposure to the environment, to the market in China. The other thing that comes to mind with the currency swap being expanded to 800 billion yuan from previously 500 billion is, you'll remember at the end of June, China launched this yuan liquidity facility with 5 jurisdictions. So Hong Kong, Singapore, Malaysia, Chile as well. And it was just an additional push to internationalize the yuan, to have the yuan used more often in trade and commerce outside of China. And that, of course, comes with the backdrop of what's happening with Ukraine and of the developed world having taken these sanctions against Russia, essentially seizing several $100 billion of reserves that Russia had in U.S. dollars. And so, again, adding motivation for China to try and increase internationalization of its currency.